Okay, guys. Good afternoon. Again, let us discuss partnership. Okay? In this particular discussion, I will discuss operation, okay, formation and operation. Okay? What do we have to learn in this discussion? Okay? Different types of formation and the division, okay, of profits and loss under operation. Okay, but first, as we all discuss, let's define first partnership. Okay, so partnership definition from the law. Okay, so we have a partnership law. Okay, and that partnership law is under Article 1767. Okay, and Article 1767 says that by the contract of partnership, two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profits among themselves. Okay? That is the definition from the standard Article 7667 of the partnership law. Okay? Other definition, okay? Accounting for partnerships should comply with the legal requirements as set forth by the partnership law, okay, as well as complying with the partnership agreement itself. Okay, so let's have first our discussion for formation and capital accounts. Okay, again, sa partnership accounting, okay, ang usual na kailangang i-account is the capital accounts. Okay? Capital accounts of the partners. Okay? So, let's have first the definition of formation. Okay? All assets contributed to the partnership are recorded by the partnership at their agreed values. In the absence, okay, of agreed values, fair market values is used. Okay? Again, all assets contributed to the partnership are recorded by the partnership at their agreed values. In the absence of agreed values, fair market values. Okay? And then, all liabilities that the partnership assumes are recorded at their net present values. Thus, if a partner contributes a non-cash asset to the partnership, for example, land or equipment, subject to mortgage, the contributing partner's capital account is credited for the agreed value or fair values in the absence of agreed values of the non-cash asset less the mortgage assumed by the partnership. Okay? That's the definition, okay, of the formation of partnership. Let's proceed now to capital accounts. Okay? The capital account is an equity account similar to the shareholders' equity account in a corporation. It is used to account for permanent withdrawals and additional contributions. Other important accounts include a drawing account, and loans to or from partners. Okay? Mamaya discuss natin yung loans to and from. Okay? Then, drawing account. Okay? Is used to account for net income or loss and personal or normal withdrawals. Okay? For example, share against net income. It is closed at the end of the period into the capital account. Okay? Loan accounts are set up for amounts intended as loans rather than as additional capital investments. In liquidation proceedings, a loan to or from a partner is in essence treated as an increase or decrease in a partner's capital account. Okay? So, that's the definitions, okay, of the formation of partnership and capital accounts. Now, what are the three types, okay, of partnership formation? First, let's discuss two or more individuals formation. Okay? As you read the first type of formation, we have the idea. Okay? Individuals. Okay? So, meaning, wala silang existing business. Okay? So, let's have the example problem. Okay? For this type of formation. Okay? Let's have this problem. Okay? On March 1, 2020, X, Y, and Z form a partnership. They contribute the following. Okay? Then, this is the contribution of the partners. Okay? Cash. Okay? Equipment at fair value. Machinery at fair value. Okay? Total contribution. Okay? Then, additional info. The partners agreed, okay, to a 3:4:3 profit or loss ratio respectively. And they assumed the mortgage to the equipment and machinery of X and Y. Okay? For X, 2,500 and for Y, okay, 1,500 and 1,000 respectively. Okay? As we go back, okay, to the definition of formation, all assets contributed to the partnership are recorded by the partnership at their agreed values. In the absence of agreed values, okay, fair market value, okay, yung gagamitin for recording certain contributions of the partners. Okay? As we have in this problem, the assets contributed by the partners, okay, stated at fair value. Okay? So, no problem. Okay? Now, question for this problem. What is the capital balances of the partners after formation? Okay? Usually, pagka formation, ang tanong lang lagi is yung mga adjustments. Okay? So, to illustrate the solution for the problem, okay, the only thing that you have to remember is if the mortgage of the asset contributed is assumed, you need to deduct it, okay, to arrive at the total contributed, okay, or adjusted capital balance after formation. Okay, that is the simplest solution that I have. Okay, so next, sole proprietor. Okay, sole proprietor. and individual formation. Okay, as you notice, sole proprietor, meaning one of the partners have existing business. Okay, in this type of formation, okay, the sole proprietor balance sheet, okay, we need to adjust, okay, all the contributions. I mean, all all existing in the balance sheet, okay, to their agreed values. Okay, so let's have example problem of this type of formation. The balance sheet presented is from the business of Mr. Brent. Okay, take note, the amounts that presented was in a book value. Okay, what have we mentioned in the definition of partnership formation? That we need to record in the partnership books at agreed values. In the absence of agreed values, all the assets contributed was to be at fair market value. Okay, so additional info. Okay, on November 1, 2020, Mr. Brent, okay, agreed with Mr. Cloud, okay, to form a partnership. Okay, they agreed with the following adjustment, okay, to the books of Mr. Brent. Okay, ito yung adjustments na kailangang gawin, okay, to proceed with the agreed values, okay, na papasok sa partnership books. Okay, so 10% uncollectible daw. Okay, so bale babawasan yung accounts receivable, okay, ng 10% kasi uncollectible. Okay, then inventory, okay, nag-increase yung inventory. Okay, so in the solution presented later, okay, as you notice, deduct and subtract lang siya. Okay, now sa total liabilities naman, okay, yung buong liability na ni Mr. Brent, okay, as stated, assumed by the partnership. Okay, and all liabilities under the partnership formation definition that we stated earlier, all liabilities that the partnership assumes are recorded at their net present value. Okay, so here's the question, okay, for that specific problem. Under the types of formation, sole proprietor and individual. Okay, what is the balance of Mr. Brent's capital account after the formation? Okay, so ang tinatanong is si sole proprietor, okay, yung capital niya after the formation. So this is how you compute, okay, sole proprietor's capital account. Okay, unadjusted capital balance, okay, then the adjustments, okay, and then adjusted capital balance. Okay, so let's proceed to the third and last type of formation. Okay, two or more sole proprietor formation. Okay, so meaning two or more sole proprietor, they each partner have an existing business. Okay, so let's have example problem for this type of formation. Okay, let's have this one. Okay, the business assets of Luca and Pascioli appear below. Okay, so this is the total assets, okay, of Luca and Pacioli. Okay, and then the liabilities and capital, okay, of Luca and Pacioli. Okay, now additional info. Luca and Pacioli agreed to form a partnership by contributing their respective assets and equities subject to the following adjustments. Okay? First, accounts receivable of 20,000 in Luca's book and 35,000 in Pacioli's book are uncollectible. Okay? So, decrease in accounts receivable of both partners. Okay? Next adjustment is inventory. Okay? Inventory are worthless. Okay? In both partners. So, decrease again. Okay? In inventories. Okay? And then, the last one is other assets. Okay? Written off. Okay? So, question. Once again, capital balance after forming the partnership. So, after adjusting, okay, the capital accounts. So, this is the solution, okay, for the example problem. Okay? Unadjusted capital balance of Luca and Pacioli. Okay? And then adjustments. And then the adjusted capital balance. Okay? By the way, in forming a partnership, the only thing that we need to adjust is the capital account. Okay? We need to arrive at the adjusted capital balance. Okay? So, that's it. That is formation. Okay? Formation and capital account. Okay? And our last topic, okay, is operation. Okay? By means of operation, the only thing that you have to remember is division of profits and losses. Okay? As a rule, okay, profits and losses are allocated based on agreement. Okay? Methods. Okay? Operation methods. Various methods exist, okay, for the division of partnership profits and losses, including the following. Okay? So, division of profits and losses, okay? First is equally distributed or allocated. Second is arbitrary ratio. Okay? Pag arbitrary ratio, the simple example is 3 is to 4 is to 3, 5 is to 3 is to 2, something like that. Okay? Now, next, capital contribution ratio. Okay? Capital contribution ratio have 4. Okay? First is the original, okay, or initial investment. Okay? Then, beginning capital contribution. Average capital contribution. Take note, some of the problems in partnership operation, okay, contribution ratio, okay, average, okay, usually average ang pinapakompute, okay, pinapakompute and then yun ang madalas na ipakompute, yung average. Okay? So, tandaan nyo yun, ha? Or ending. Okay? Next is interest on capital balance and or loan balances and the balance on agreed ratio. Okay? Interest on capital balance, okay? And or loan balances and the balance on agreed ratio. Okay? Yan yung deductible. Okay? Pagka kukumputin mo yung allocated net income sa partners. Okay? Yan yung isa sa needs. Okay? Next is salaries. Okay? To partners and the balance on agreed ratio. Okay? And then, yung bonus to partners. Okay? And the balance on agreed ratio. Okay? By the way, interest on capital balance, salaries to partners, and bonus to partners are the components of allocation of net income. Okay? So, under bonus to partners and the balance on agreed ratio, okay, first, bonus as an expense in computing the bonus amount. Okay, here bonus is computed based on net income after bonus. Okay, then the second one, bonus has a distribution of profit. Okay, here the bonus is computed based on net income before deducting the bonus. Okay, and then last, interest on capitals and or loan balances, salaries to partners and bonus to partner, and the balance on agreed ratio. Okay, most of the time, okay, in the division of profits and losses, madalas na itanong is yung sa capital contribution ratio is yung average. Okay, and then pag-compute ng bonus to partners. Okay, whether it after bonus or before. Okay, interest, okay, on capital balance, minsan yan yung follow-up question kapag ka tinatanong yung average, okay, capital contribution. Okay, yan yung mga key points, okay, na dapat yung tandaan pagka sinabing partnership operation. Okay, so the method of division to be used in any given situation is generally the method specified in the partnership agreement. This agreement must always be consulted first, since it is legally binding on the partners. If no profit and loss sharing agreement, okay, or arrangement is specified in the partnership agreement, the partnership requires that profits and losses be shared according to capital contribution. Capital contribution should be interpreted to be original capital, beginning capital of each year in the absence of original capital. Similarly, if the agreement specifies how profits are to be shared but is silent as to losses, losses are to be shared in the same manner as profits. Okay? Notice that the profit and loss sharing ratio is totally independent, okay, of the partner's ownership interests. Thus, two partners may have ownership interests of 70% and 30% but share profits and losses equally. Okay? Meaning, interest ratio and profit or loss ratio is different from each other. Okay? Profit and loss sharing ratio is for net income division. But for interest ratio, okay, that was used, okay, that is used for allocating interests of the partners. Okay, so let's have example number 1. Okay, example problem number 1. Okay, the partnership agreement of Cupra, Harit, and Aldus provides for the year-end allocation of net income. Okay, in the following order. Okay, first, Cupra is to receive 10% of net income up to 200,000 and 20% over 200,000. Okay, that is the first. Then the second, Harit and Aldus each, okay, are to receive 5% of the remaining income over 300,000. Okay, and then the balance of income is to be allocated equally, okay, among the 3 partners. Okay, now how to compute or how to allocate net income from the partners based on this statement or transaction. Okay, question. The partnership's 2020 net income was 500,000 before any allocations to partners. Okay, question. What amount should be allocated to all partners? Okay, so this is how you compute. Okay, and to find to determine how much for each partners, okay, under the net income 500,000. Okay. Okay, first, the first 200,000, okay, pertains to Cupra. Okay, 200,000, okay, 10% of that will include in Cupra. Okay, over the 200, okay, so 500 less 200k, 500k less 200k, okay, is 300. Okay, and that 300,000, okay, will get also 20%. Okay, and that 20% will included also in Cupra. Okay, that's the agreement. Okay, so the total, okay, the total allocation for the first transaction is for Cupra only. Okay, and the total is 80,000. Okay, the first one of the 10% of the 200 is 20,000, while the over or the excess from the 500k is the 300. Okay, less the 200. So the 300 times 20% is the 60. Then the total amount that received from the situation or transaction, okay, Cupra have 80,000. Okay, and the remaining income, okay, next, and the remaining income over 300, okay, 500k, the total net income, less 20,000 and 60,000 and 300,000. Okay, the 20 and the 60, okay, have mentioned earlier. Okay, so the only thing that you need to have a 5% is the remaining balance of net income, okay, that will allocate to Harit and Aldus. Okay, the total of 5% is 12,000, and the 12,000, okay, divided by 2 for Harit and Aldus. Okay, so Harit and Aldus will have a 6,000, okay, share in the remaining income, okay, and then the balance, okay, 500,000, okay, less 80, okay, less 12, okay, the balance is 408,000, and that 408,000 will allocate to each partner independently or equally. So just simply divide the 408,000 by 3. So you will get 136,000 each. Okay? So allocated to all partners, Cupra will receive a portion of 500 in the amount of 216,000. While Harit and Aldous have the same allocation for 500,000, which the amount of 142 each for Harit and Aldous. Okay? That's how you compute, okay, allocation of net income. Okay? So, let's proceed to our last example problem. Gorg and Lancelot created a partnership, okay, to own and operate a health food store. The partnership agreement provided that Gorg receive a salary of 10,000 and Lancelot a salary of 5,000 to recognize their relative time spent in operating the store. Okay? Remaining profits and losses were divided 60-40. Okay? 60-40 is an arbitrary ratio. Okay? To Gorg and Lancelot, respectively. Income for 2019, the first year of operations of 13,000, okay, was allocated 8,800 to Gorg and 4,200 to Lancelot. Okay? Additional info, on January 1, 2020, the partnership agreement was changed to reflect the fact that Lancelot could no longer devote any time to the store's operations. Okay? Another information, the new agreement, okay, allows Gorg a salary of 18,000 and the remaining profits and losses are divided equally. Okay? Okay, additional info. In 2020, an error was discovered. May error daw na discover in 2020. Okay? That the 2019 reported income was understated by 24,000. Okay? So, yung 2019, okay, is understated by 4,000. So, accumulated siya, net income sa current year. So, na account siya for 2020. Okay? So, the partnership income of 25,000 for 2020 included 4,000 related to 2019. Yan yung sinasabi ko. Okay? So, the question is, in reported net income of 25,000 for 2020, Gorg and Lancelot would have, okay? Magkano, okay? Magkano yung mapupunta, okay? Kay Gorg and kay Lancelot, okay? Solution is this, okay? Analysis of the solution, okay? Let's have first the 2020 only, okay? In the preceding informations, the new agreement allows Gorg a salary of 18,000, okay? So, in the solution, as you can see, Gorg, okay, have 18,000, okay? Then the balance is equal. Okay? Bale yung 21,000, okay, is the net income. Okay? Net income for 2020. Kasi the reported income for 2020 is 25, but the 4,000 is error or understated prior year. Okay? Income siya nung 2019. Okay? So, yung 4,000 na yun, okay, kailangan mo siyang hatiin based on profit loss ratio. Okay? So, yung 4,000 allocated to GORG is 2,400, while in last lot, okay, 1,600 to have a total of 4,000. Okay? And then the 21,000, kailangan mo rin siyang hatiin for 2020. Okay? Para makuha mo yung total reported net income for 2020 na 25,000. So, again, based on the new agreement, salary of GORG will be 18,000. Okay? So, the balance of 21,000 is 3,000. Then, the balance of 3,000 will be equally distributed to GORG and Lancelot. So, in 2020, okay, income of GORG is 19,500. Okay? And additional, okay, income from distributed yung 4,000 na understated na 2,400. So, 19,500 plus 2,400, the total reported net income 2020 for GORG is 21,900. While in Lancelot, okay, as said to the new agreement, okay, Lancelot will not longer devoted. So, wala na siya doon. Okay, si GORG lang yung may salary. So, ang part lang doon sa 2020 ni Lancelot is yung share niya doon sa 3,000. Okay, so he have 1,500 doon sa distribution of 3,000. And then yung 4,000 distribution of 1,600. So the total reported net income 2020 for Lancelot is 3,100. And then when you add the two, the reported net income for GORG and Lancelot will have the reported net income stated in the problem 25,000. Okay? So, last problem, okay, for operations. Let's have this one. Okay? Computing of bonus. Okay? Computing of bonus and net income. But this time, okay, net income will have to determine, okay, because the bonus is given. Okay, so let's have this one. Hazel and Augustus are considering forming a partnership whereby profits will be allocated through the use of salaries and bonuses. Bonuses will be 10% of net income after total salaries and bonuses. Okay? Hazel will receive a salary of 30,000 and a bonus. Okay? Augustus has the option of receiving a salary of 40,000 and a 10% bonus, or simply receiving a salary of 52,000. Both partners will receive the same amount of bonus. Take note, both partners will receive the same amount of bonus. So, kung ano man yung makompute na bonus, okay, times 2 mo lang. Okay? So, question or determine, okay? Determine the level of net income. Okay? So, in this time, okay, let's compute for the net income. Ang basis natin is yung bonus. Okay? That would be necessary so that Augustus, okay, si Augustus yung tanong, would be indifferent to the profit sharing option selected. Okay? Let's have this. Okay? to equate for the bonus, okay, to equate 52,000 to 40,000 plus bonus. The bonus should amount to 12,000, okay, by deducting 52,000 and 40,000, okay, and that amount of bonus you simply multiply by 2 so that Hazel will receive also the same amount of bonus of 12,000. Okay, so after this analysis, okay, based on this, okay, the following equation, okay, to get the net income should be developed. Okay, by computing the net income, we need to use the let x, mga ganon. Okay, so this is how you compute the net income. Okay, bonus, okay, bonus is equal to 10% of net income after salaries, after bonus. Okay, so the total bonus, as I mentioned, okay, for both partners, Hazel and Augustus, are 24,000, 12,000 each. Okay, so bonus is 24, okay, equals 10% of net income after salaries, okay, and after bonus. Okay, so let's compute first for the total, okay, total salaries and bonus. Okay, because in salary, okay, we have two options, the 30,000 and the 40,000. Okay, so we need to add that 2 and then also add the bonus. Okay, so that we can get the total. Okay, and then after you add all the salaries and bonus, okay, we get 94,000. Okay, and then multiply by 10%, the 94,000 we will get 9,400, and then the formula, okay, is 24,000 bonus is equals to 10% of net income, okay, less 9,400. So transpose the 9,400, so you will get a total bonus of 33,400. Okay, and then that total bonus, okay, 33,400 divided by 10%, you will get the net income of 334,000. Okay, now this is the last, okay, topic that I will discuss today. Okay, I hope that I form something in your mind. Okay, forming, okay, constructing concepts on how to solve and analyze formation and operation of partnership. Okay, on Sunday, let's have discussed the two remaining topics for this particular accounting subject, partnership accounting. Okay, dissolution and liquidation. Okay, so I will end this live discussion. Thank you for listening. See you on Sunday. God bless.